July 2025 stock market chaos, S&P 500 soars, Nasdaq crashes, and Tesla's wild ride. Stock market update as of July 22, 2025, a tale of two markets, triumph and turmoil. As we navigate the ever-shifting landscape of the stock market, July 22, 2025, marks a day of stark contrasts. On one hand, we're celebrating the S&P 500's new record high, a milestone that underscores the resilience of the broader market. Yet, this triumph is not without its shadows. The Nasdaq Composite, often the darling of tech investors, has stumbled, snapping a 6-day winning streak. What's behind this? A wave of selling in AI stocks, including heavyweights like Nvidia and Broadcom, has dampened the Nasdaq's spirits. Despite this, the S&P 500 rose to a fresh high, showing that not all tech stocks are in the red. The Dow Jones Industrial Average also saw gains, rising by 179 points, inching closer to its previous record. Small-cap stocks joined the party, posting impressive gains. But here's where it gets controversial. While some investors are rejoicing in the S&P's success, others are questioning whether the Nasdaq's fall is a temporary blip or a sign of deeper issues in the tech sector. And this is the part most people miss. What does this divergence between the S&P 500 and Nasdaq mean for the future of the market? Are we seeing a tale of two markets, each heading in different directions? What do you think? Is the S&P's record a sign of strength or just a temporary blip? Let's hear your thoughts in the comments. Wall Street reacts to mixed earnings and trade deadline pressure. In a landscape where financial markets ebb and flow, Wall Street experienced a noticeable divide as mixed earnings reports fueled investor sentiment, and crude oil prices took a hit just as a critical trade deadline looms. Key takeaways. The US dollar remains relatively weak while traders eagerly anticipate clarity on tariffs. Gold continues its upward trajectory, benefiting from a depreciating dollar. Hopes for a US-European Union trade agreement are waning as the deadline approaches. Oil prices face downward pressure amid concerns regarding demand. On July 22, 2023, New York witnessed varying performances in its major stock indexes. The Dow Jones Industrial Average climbed, while the Nasdaq Composite experienced losses, reflecting a complex market atmosphere as participants gauged mixed earnings results. This situation is particularly poignant as signs emerged that President Donald Trump's lengthy trade battle is beginning to impact earnings for corporations, especially as the deadline for new deals approaches. The S&P 500, another benchmark, ended the day with marginal gains, although the tech-heavy Nasdaq index fell due to underperforming technology stocks. Robert Pavlik, a senior portfolio manager at Dakota Wealth in Connecticut, shared insight into the market's current state, stating, "Investors are seeking more catalysts for movement." There's noticeable caution in comments coming from various companies. With the ongoing uncertainty surrounding tariffs, guidance tends to be mixed, which adds more complexity to decision-making. The second quarter of earnings reports is currently in full swing, with nearly 20% of S&P 500 companies already having shared their results. Notably, 79% of these companies surpassed analysts' expectations, according to data from LSEG. Analysts are forecasting a significant rebound with an expected 7% year-over-year growth in S&P 500 earnings, a noticeable rise from the 5.8% growth previously predicted on July 1. Yet, despite these promising numbers, the repercussions of the trade war are becoming evident in corporate financials. For instance, General Motors reported a drastic 32% drop in its second quarter core profit, a setback largely attributed to crippling tariff costs that stripped an astounding $1.1 billion from its earnings. As the August 1 deadline nears, the chances of a US-EU trade deal seem to diminish further, compelling EU members to escalate their considerations for potential retaliatory measures. U.S. Treasury Secretary Scott Bessent conveyed on Tuesday his intention to meet with his Chinese counterpart to discuss the possibility of delaying the upcoming trade talks once again. This comes as the two largest world economies grapple with the complexities of technology transfers and rare earth materials. Chuck Carlson, CEO of Horizon Investment Services, remarked on the nature of these negotiations, stating, "These kinds of talks are typically classic. Progress rarely occurs until absolutely necessary, usually right before a deadline. Either the talks are extended, or an unexpected resolution is reached at the last moment. Carlson added a thought-provoking consideration. On the flip side, Trump will eventually need to follow through on his promises. If he doesn't, he risks becoming the boy who cried wolf, which could undermine his negotiating power as others may doubt his future commitments. In terms of numerical performance, the Dow Jones Industrial Average rose by 179.12 points, or 0.4%, reaching 44,502.19. Conversely, the S&P 500 and the Nasdaq Composite rose marginally by 3.99 points, 0.06%, to 6,309.59, and fell by 81.49 points, 0.39%, to 20,892.69, respectively. Globally, MSCI's stock index showed a slight gain of 0.07%. However, Europe witnessed declines in both the Pan-European Stoxx 600 index and the broad FTSE Eurofirst 300, which fell by 0.41% and 0.39%, respectively. Emerging market stocks were not spared either, dipping 0.31%. Meanwhile, stocks in the Asia-Pacific region had a mixed day, with Japan's Nikkei decreasing slightly by 0.11%. During this trading session, the dollar continued its downward trend amidst a generally subdued currency market as investors stood by, anticipating any developments concerning trade agreements before the impending August 1 deadline. The dollar index decreased by 0.5%, settling at 97.36, while the euro rose by 0.49% to $1.1752. Additionally, the dollar declined against the Japanese yen by 0.56%, trading at 146.56. In the cryptocurrency realm, Bitcoin saw a rise of 1.98%, priced at $119,320.90, whereas Ethereum faced a decline of 2.41%, lowering to $3,668.31. Treasury yields also continued their downward trend, marking 3 consecutive sessions of decline, as traders took a moment to pause following Monday's rally. The yield on benchmark 10-year Treasury notes went down by 2.8 basis points to 4.342%. Similarly, the 30-year bond yield dipped by 2.6 basis points, from 4.937% to 4.9111%. Also, the yield for the 2-year note fell by 1.9 basis points to 3.833%. On the commodities side, U.S. crude oil prices decreased by 1.47%, settling at $66.21 a barrel, while Brent crude saw a minor drop of 0.9%, concluding at $68.59. Gold, however, experienced a rise, increasing by 1.07% to $3,431.87 per ounce, with futures climbing by 1.15% to $3,441 per ounce. As you digest this information, it's worthwhile to consider the evolving landscape of trade negotiations and their impact on the economy. How do you see these developments affecting market stability? Will uncertainty prevail, or can we expect some clarity soon? Share your thoughts in the comments below.